Okay, so we're looking at control account, looking specifically at the sales ledger control account or the receivables control account. This is where you just get the total of how much everybody is owing you, all the receivables, their totals, and also their transactions. All your transactions with your receivables, you just get the totals and you put them in one account, right? So the sales ledger control account is an asset account because remember, a receivable is an asset. Okay, a receivable is an asset. So this control account is treated like an asset account. And I believe we remember the double entry rules. An asset account increases with what and it decreases with what in terms of debit and credit. And decreases with credit. Okay, so with this question here, all that you just need to ask yourself is it reducing the Ngongole or the amount the receivable is owing me? If it's reducing, you credit. If it's increasing, you debit. Okay, so we look at this question here. Prepare the sales ledger below. Trumbull Limited balances for the sales ledger control account was 1,975. The following transactions occurred. So we have these transactions, which we're going to look at each in detail. All right. We're going to put all of these transactions into the control account and get the final balance. So with these type of questions, colleagues, first thing you need to do is you need to find out what is the opening balance. So the opening balance is 1,975 kwacha. And since it's an asset account, where will the opening balance be put? Debit side or credit side? Debit side, correct. Okay, so let me just make this T account here. So here we have the debit side, DR. Here we have the credit side. Okay, so we say balance brought down. We're going to put this amount here, 1,975. Okay, so we're now going to look at all the transactions and we're going to put them, the trade, in the sales ledger control account. Okay, so we've start with credit sales. Colleagues, credit sales, we've made credit sales to people. What do we expect this to go on in our control account? Is it increasing it or decreasing it? Okay, let's even be more intuitive. Colleagues, okay, whenever there's a credit sale, what is the journal entry? What is the journal entry for a credit sale? Who do you debit and what do you credit? Yes, you debit the receivable. And what did you credit? And you credit sales, yes. So from here, Where do you think the credit sale is going to go to in the control account? The first thought that has come in your mind, that's the one. Just say it. Okay. Mm-hmm. When you make a credit sale, you debit the receivable because they're not receiving any money. Okay. You're being owed money. Increase in an asset, you debit the receivable. Then you credit sales. According to the accruals concept, whenever you make a sale or whenever you incur an expense, you record it even though money hasn't been transferred. So you're going to credit sales. So the question is this total credit sales of 17,500, where is it going to be on our control account? Is it going to be on the debit side or is it going to be on the credit side? From that journal entry here, where you see receivable, oh, wait, uh-huh, you know, yes, to be on the debit side. Credit sales, yeah. Well, how much was it? 17,500. All right. Any questions? Okay, we can go to the next transaction. Discount allowed. Colleagues, what is a discount allowed? And what is the journal entry whenever there is a discount allowed? So we start. First question is, what is discount allowed? Is yes, this is a discount that's given to customers. So to us, the business, is it treated like a gain or an expense? Yes, because since you are receiving less from what the customer pays you. What is the purpose of a discount allowed? This is a what you call a cash discount. What is the purpose of a cash discount? Means to encourage quick payment. So discount allowed happens when a receivable has paid you. Okay, someone's owing you money, you've told them, okay, if you pay me earlier, I'm going to give you a discount. Okay. So for example, if someone is owing you a 1,000 and you tell them, okay, I'm going to give you a 100 kwacha discount, then they pay you the 900 kwacha. What will be the journal entry? Someone owes you 1,000. You give them a discount of 100 kwacha and they pay you 900 kwacha. What would be the journal entry? Yes, give it a try, colleagues. Give it a try. What would be the journal entry? 1,000. Yeah. And you've given them a. Uh-huh. Uh-huh. Uh, yes. Now there's also one other account happened. Uh-huh. Yes. Then you credit the receivable 1,000 kwacha. Any questions? Now, on the control account, you're not going to put the total amount, you're going to put the discount allowed amount. So, where will the discount allowed amount go to? The debit side or the credit side? Discount allowed and cash basic, since they go hand in hand, where will they be put? On the debit side or the credit side? Since they're going hand in hand, where will you put them in the receivables control account? Yes, on the credit side. Any questions? Yes, in the control account, you put cash 900, discount allowed 100, credit side. Yes. Now, in this question, they've just given us discount allowed 800. So you just put discount allowed, this 800 amount, you put it on the credit side. Excuse me. Any questions before we move to the next one? Mm-hmm. 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 Because it's reducing the amount that is being owed to you. So whatever is reducing the amount being owed to you goes on the credit side. So just remember, with every genuine transaction where a receivable appears, that's where it's going on the control account. Okay, colleagues? With every genuine we'll be doing from on these examples here, where the receivable appears, that's where it's going on the control account. Okay, dishonored checks. So this is a situation where someone has paid you by check, you go and take it to the bank, and the bank has told you there's insufficient funds. So we cannot clear this check. So we start the story like this. The person came to pay you by check, right? So what would be the journal entry, the original journal entry? The person pays you by check. What would be the journal entry? Yes, debit bank and credit what? Credit receivables. Then now you go to the bank, you cash in that. So here you have recorded it in your cash book, all right? The bank column, you've recorded it. Then now you take it to the bank, and the bank tells you there's insufficient funds, so this check can't go through. So it means you have to reverse this journal entry here that has been done here. So how do we reverse this journal entry? How will we reverse the entry? Here you credit bank, and what do you debit? Yes. Colleagues, any question on that? Debit receivables. So basically, you're saying this person is still owing you. Okay. This person is still owing you because since the check hasn't gone through, so they are still owing you. Okay. And then that amount you debited bank, since it was a fictitious amount, you thought that you've received money. So you have debited your bank, meaning your bank account has increased. Now, since you found out that there was insufficient funds, so you have to remove that amount from the bank account. So the dishonored check is going to go on the debit side of the control account. Any questions? We can go to the next transaction. Okay, payments from debtors. So here it's where a debtor or receivable pays you. And we've already seen the double entry is this one here. Debit bank was your bank account, the money is increasing. Cash or bank, depending on how much they paid. Then you credit the receivable since what they're owing you has reduced. So that's a reduction in an asset. Reduction in an asset, credit entry. So payment from debtors is going to be on their credit side. Sometimes they might put cash or bank, just know that okay, if it's cash or bank, then you just know that okay, they've paid via cash or they've paid via bank. Yes. Any questions? All right, bills receivable. Colleagues, what are bills receivable or not receivable? It is a promissory note that you're going to receive your money. So it's also taken as a payment. Now, instead of receiving cash or a check, you're receiving this promissory note. Okay. So this promissory note is taken as a legal tender. So it's like a payment. Okay. So the way you treat check or cash or bank or a payment from a debtor, that's how you also treat bills receivable. All right. You debit, instead of bank, you debit bills receivable. Okay. You haven't received money, you have just received this document. Okay. You haven't received money, it's the document, this bills receivable document that you're going to get your money. Okay. So bills, debit bills receivable, and you credit the receivable or the actual debtor who has paid you. Any questions? Mr. Twambo, any questions? Madam Betha? Madam Geraldine? Mr. Chimonia? No, I was explaining what a bills receivable is. Instead of receiving money, you've received a promissory note that you're going to get your money. So this note is taken also like a payment. Okay, I'm owing you money, then I come with a bills receivable to you. Okay, and you're going to take that document and you're going to clear my debt. And then your money will come. I've never seen a real bills receivable in real life before. Just read it in books. So maybe what should happen is after you've got that note, after some time, you're going to get your money. Any questions, colleagues? Okay, move to the next one. Return inwards. You debit what? And you credit what? Okay, just explain why. Since the way you've answered, colleagues, and why, as Madame Geraldine said, debit return inwards and credit. Yes. Colleagues, are we okay with that? I knew there will be questions, yes? Okay, returning what is a contra revenue account. It reduces your revenue, okay? So you debit return inwards. Then, since the person was owing you, now they've brought back some goods. So it means the amount that they were owing you reduces. You know, yeah, madam, you're saying that the returning what is just for grade eights, huh? Returns. Now, do not worry, I've put it here. Colleagues, just remember these two terms. Yeah, most, I think you will see most grade 8, 12 books, lower and upper secondary, they usually use sales returns. But even in some universities, you still see sales returns. So it's just best you know both terms. Yeah, it's just best to know both terms so that you're on the safe side. Okay, any questions, colleagues? A payment. Mhm. And then what happens? Maybe your next question should be, what happens if the money doesn't come? What happens if the money doesn't come? Yes, you reverse. Or if you want the money faster, you can take it to the bank, but you get, I believe you get a smaller amount from what I read. If you want the money fast, you take it to a bank and say, okay, I got this promissory note, I need the money now. But they'll give you at a lower, they'll give you a lower amount. Maybe they might move like a 10% from there. Has anyone ever dealt with a bills receivable? Madam Yvonne, the accountant? Mr. Chimunya? Okay. Interest charged on debtors. All right, colleagues, so you tell your debtors that you have to pay within 1 month. If you don't pay within 1 month, we're going to add an interest charge. Okay, just think you work at Zamcash, right? The person is borrowed the money for a week. They don't pay in that week. It means you need to charge them some interest. So what would be the general entry? No, sir, no, sir. Bad debts. That's a situation where there's another scenario. That's another scenario. Okay, that's another scenario. Excuse me, Madam Gerald. What should be debited? Not no, no. Yeah, colleagues. If anyone, just yes. So if anyone's working here at Zamcash and you debit interest, you'll be fired. So you debit receivables, okay, because now they're owing you plus interest. So you debit receivables, and then interest is like income, other income for the business, okay? So income, revenue, increase in income or revenue, according to the double entry rules, you credit, okay? So sometimes they won't say interest charge on on data. Sometimes they'll just put interest. So you are supposed to assume that interest is charged on the thing, on the datas. Yes. No, sir. Remember, interest is viewed in two ways. It is the charge of can be viewed as a charge of borrowing or a charge on something, and that's to the person who has borrowed the money. But the person who's giving the money, interest is the profit or the income you earn. So here we're viewing it us as the business. There are people owing us. So they have passed the date. So we've placed interest, an interest charge on them. So to that receivable, it's the expense, but to us, it's the income. It's income to us. Is that okay, Mr. Nshimonia? Yes, 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 yes. Mr. Twambo, you're quiet today. Is Mr. Uh-huh. Okay, yes. Yes. Because they're owing us more. Yes, yes. Yes. Any question? Uh-huh. Yes. Yeah. Correct. And we're crediting interest charge because it's income and revenue according to the double entry rules. You credit. Okay, we go to the next one, refunds. Okay, now as I said, if you notice refunds, oh, where's that thing? Refunds is on the debit side. Colleagues, why is this so? Why is this so? Mm-hmm. Yes, you are paying back. Yes, yes. Although, although remember on the control account, anything on the debit, it means increase. So now if you're paying back, why is you debiting the control account? Why is you increasing the control account? You are right with what you have said, Mr. Twambo. Okay, don't get me wrong when I've said that. Yes, you're actually paying back. It's true. You're actually paying back. Okay. So let me explain why it's on the debit side. The assumption is if, let's say, a receivable has overpaid you, okay, a receivable has overpaid you. For example, just let's look at these two accounts here. For example, you have a receivable owing you 1,000. Okay. So then, for reasons that we may never know, let's say they come to pay you over, maybe they pay you a 1,200. Okay. So when they pay you that 1,200, your general entry will be debit bank 1,200, credit receivable 1,200. Then, so here on bank you put 1,200. On receivable account you put 1,200. Then you notice now, oh, this person has actually overpaid me. And they were owing me 1,000, but they paid me a 1,200. So in actuality, I'm owing them 200. Yeah. You're owing a receivable 200 because they've paid you over. All right. So what are you going to do to remove this 200 from the receivable account so that the receivable account becomes zero? You need to debit it. So you need to do this journal entry. You're going to debit the receivable 200 and you're going to credit bank 200. So that when you do that, the receivables balance now is zero. Okay. And then on your bank account, it should remain as 1,000. So this debit entry for the receivable, this refund, is the one that's going to appear on the debit side of the control account. Any questions? Mm-hmm. Okay, yeah, your question is very valid. Yes. Okay, so since they overpaid and were owing them, so they became a payable at that point. They became a payable at that point. Okay, but since you're just reversing the transaction and everything, so you just still treat them as a receivable. Okay, it's more like you're just correcting a mistake that had happened because someone overpaid you, so you're trying to correct this mistake. So in true sense, when you find out they've overpaid you and now you're owing them, yes, they are payable to you. Okay. But just remember, no, I'm just correcting this transaction. That's why I'm still debiting receivable there and crediting bank material. Is that okay, Mr. Chimoni? Yes, we can put slash payable here because when you're paying, it means what you're reducing the payable, it reduces. Remember, whenever you're paying someone that owes you, you debit the payable. So here, refunds, okay, you put on the debit side of the control account refunds. And that's if you're an honest person. Because if you're not an honest person, you take that overpayment and you won't let the person know. But when the auditor comes and is going through, they will notice that. They'll notice that. Yes. Any questions, colleagues, before we go to our final one, which is bad debts? Okay, what's the general entry for bad debts? When someone is owing you money, then something happens to them. Let's say worst comes to worst, they pass away. So you even know that okay, this money I can't get it back. What would be the general entry? Mm-hmm. Yeah, actually, I should have even said Mr. Chimunya. So you debit what, Mr. Chimunya? Yes, because it's like an expense. Yes. Then you credit the receivable to say that okay, these persons they're no longer owing me. I'm not going to get this money back. So yes, so these bad debts will come on this side here. Any questions? Okay, now we can close this account. So this is how you close these permanent accounts. You get the total for the debit side and you also get the total for the credit side. All right. So let's see the total for the debit side, those with calculators, 1,975 plus 17,500 plus 700 plus 100 plus 400. What do we get? One should calculate debit side, someone else calculate credit side. 800 plus 8,900 plus 300 plus 500 plus 600. At dog. Mm. Oh, aye, yeah, yeah. Yes, because yeah, dog is yeah. Don't ask me at Sawa, is it DR? I do not know. I don't know. Okay. Colleagues, what about on the credit side? What are we getting? I believe debit side is high, 11,100. Okay. So the higher amount you put it both on the debit side and on the credit side. Okay. The higher amount. Okay. Then on the credit side, since it's the smaller side, so you go on the smaller side, you say balance carried down. Okay. So you're going to do that 20,675 minus what was that? The credit balance that you got again? 11,000. 11,100, yes. So 20,675 minus 11,100. 9,575. Oh, yes, carried it down here. So balance carried it down. So the balance carried down is at the end of the month. So if this was 31st January, let's assume this is January. So the carried down always comes at the end of the month. So it's a 31st January, balance carried it down 9,575. Then you come on the opposite side, beginning of February, 1st February, you say balance brought down the same 9,575. Yes. Any questions?